Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for June 8th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's the analysis for the ES. Looking at the daily time frame, you can see that the previous session was a struggle throughout the session. Eventually ended with a sell-off late in the day here, leaving behind a tail on top. 2118s was the high of the session, and price continues to hold above 2106s. I mentioned before that that could be potentially a rejection day here, and if it is a rejection day, then you'd likely see an absorption type of signature develop to the right of this zone, where bears look to come in and defend for a day or two ahead of a potential reversal back toward value. Now, obviously, we have to see this thing continue to develop. 2106 is the previous week's high. That's where obviously some sell stops are. So if bulls are attempting to hold above the previous week's high here, the expectation is that there are sell stops here, and if bulls do not get paid, the sell stops likely come out. So right now, this is still in development. We got to continue to watch this. This isn't as strong a rejection as you would like to see, so it's not as easy to call that this thing could return to value. But obviously, that's what we're looking for up here. We're looking for signs of rejection in this narrow portion of the profile that can imply that a return to value could be seen down the road. And right now, it's kind of building out in that form right now. So we have to continue to watch this to see how it develops. Overall, 2106 is the key level. Failure to hold above that zone. I mentioned before, if price fails to hold above that area, that could be an easy rotation, at least back to 2085 and perhaps down into 2061 and across the range into 2030. If we take a look at the intraday time frame, you can see here we put up our 2106.75 to 2116 half impulse range. That's our key range right there with a midpoint at 2111 half. Price attempted to hold above the top of that range and failed all the way back down to the bottom. We've seen bulls come back in and defend. So this is very similar to what you'd normally expect. You'd see several passes here back and forth as the market attempts to defend rotations into 2114, 2115 ahead of a potential decline ahead on a swing basis. So we're not likely to see a big reversal anytime soon. We could see several more passes in this range, as I mentioned yesterday. But right now, a clear range developing above 2106s. 2106 is the key level to watch for an eventual break to the downside. Otherwise, holding above that zone still gives life to further upside price discovery. We have an upside primary target on the day at 2120. So should price remain above the 2114s here, we could see a slow and steady push toward 2120 as the primary upside target. So keep that in mind. Now taking a look at crude oil, you can see here this one continues to play out as we expected, which is to the upside. We mentioned before the 47-46 zone was very important. When price pushed through it here, we were talking about a pullback being a buying opportunity for further strength. All pullbacks above that area have been defended, as have been pullbacks into the LVN. That has led to further strength. We talked about 51.65 being the next upside target, being the LVN. That could be a short-term fade opportunity. Obviously, it's hard to fade crude oil right now, being as strong as it is, but at least on a very short-term basis here, any push into 51.65 could be a short-term fade opportunity back toward 50.21. Any pullback could be a great buying opportunity for the next upside target. As I mentioned before, 55s could be the next major target ahead, as that's the HVN above. Remember, the market wants to go from acceptance to rejection and back to acceptance, or from rejection to acceptance and back to rejection. And so right now, with price pushing into this LVN, we could see a pullback of some sort that leads to the next buying opportunity in the 55s. So short-term strength still ahead. We could see a little bit of a fade off 51.65, so keep that in mind. Looking at the intraday time frame, very bullish overnight move so far. The last time we saw this, we saw a double distribution trend day type of setup develop, where we had a distribution down in the overnight lows here, and then a second distribution defend here with an LVN coming between. We could see that type of behavior again. It's been very choppy for crude oil here with bursts of strength for the most part. So keep in mind that you want to trade edges of the range or trade great pullbacks to value. In this case, with strength being to the upside here, we could see pullbacks toward ETH VWAP being a buying opportunity for a continuation higher. Looking at gold futures here, one thing we were looking for was a pullback to 36.5 and even as low as 28s for a shot at buying this thing and swinging it back toward 67 to 75. We have a primary target here at 69. We got within 5 ticks of our 36.5, and additionally we saw VPOC, composite VPOC, shift up from 38.5 to 38.5 from 36.5, and that was all the market needed there to buy and flip this thing higher. So our key levels again from 1208s all the way up, and then the pullback into our zone have been on fire here. Very, very solid moves. We should see a likely continuation into 1269 ahead, with the potential to see a move all the way into 1279 by the end of the week. Let's take a look at the NQ now. The NQ has shown the most significant signs of rejection here, at least short term. We have kind of a small range that had formed the previous week, poked above the top of that range, failed to hold, and now we're seeing new lows here over the last 2 days. So this could be, again, a sign that we're headed back downward. And what I mentioned before was, with price pushing through 4,400 and rallying toward the top of the recent distribution over here, we could see weakness off the 45.50s that brings price right back down, at which point we see another distribution form between 4,400 and 45.50. So right now, this early rejection here, again, with the expanding nature of this range, could push us down to lows back toward 44.50. We have 44.49 quarter as the primary bear target for the week if this high remains intact. So we could be looking at weakness here. So keep an eye on the previous month's high. That's 45.28. If price rejects off that zone, it could be a nice selling opportunity back toward 44.49 by the end of the week. On an intraday basis here, you can see that price dropped below the previous week's close, 45.09.5, and was quickly rejected back to 5-day value. And it has since shifted down here, basically to 45.22s. We've got to keep an eye on 5-day value here. Through 5-day value opens up a return back toward the previous session's RTH high of 45.32. One thing that I find interesting here is after the big rejection, we did see bears come in and defend time after time here and led price to new lows. That's an absorption signature that is playing out. So I would say that any return back to 45.32s could be a very nice selling opportunity back down if you believe that new lows are ahead into 44.50. All right, that's it for now. Let's see how this thing plays out heading into the new day of trading. Good luck and trade well.